Hi everyone, I'm going to take you through a video solution for the 2022 Junior Cycle Final Accounts question. As part of studying this question, I would encourage you to have the question opening from your exam papers. It was question 17 in the long question section, and the company in question was Cadden Ltd. You're presented with this information, and what you're asked to do then on the next two pages was to complete the income statement and the statement of financial position. So in this video, I'm going to break down the final answer. So I'll show you the marking scheme first, which you can see here. They gave you actually the first section, the trading account section, up as far as gross profit, and then you were expected to get the rest of the question correctly. So when you go and see the marking scheme and the marks beside the questions, that's the amount of marks that were allocated for each of those figures. So I'm just showing you here, this is all the stuff we're going to go through in the video to understand where the final answer, which is the capital employed at the bottom, comes from. Okay, so we're going to start with the trading account first. So to get the gross profit, we complete something called a trading account. And what that is sales less cost of sales or cost of goods sold equals gross profit. So the sales are any sales that a business would make throughout the year. The cost of sales then is the cost of getting the product ready to be sold to the customer. So the cost of getting the product into the shop and be ready to sold to the customer. And then the gross profit is the profit generated by the business as a result of making and selling its products. So when you're looking at cost of sales, or what will be in a cost of sale, so it will be the opening stock. So that's the stock you start the period of time, the year with in your stock room, plus any purchases that you've made throughout the year, plus any carriage inwards or import duty. So carriage inwards, well, the word carriage means transport. So the cost of getting the goods into your shop before you sold them to the customer. Or maybe there's import or customs duty, which could be you have to pay it to bring it in, the goods into the country from another country. So when you add those three things together, you're going to get something called cost of goods available for sale. Then what you do is you take away closing stock. And the reason you do that is because you haven't sold that stock yet. So opening stock plus purchases plus carriage inwards or any import or customs duty, they could be separate in the question. And that's going to equal cost of goods available for sale minus the closing stock because you haven't sold that yet. And that will give you the cost of sale, the cost of goods sold that is needed to get the gross profit. So if we see in the 2022 question, you will see here they've given you that information. Now, I know it was filled in for you in the question, but they gave you that information in the question to be able to use. So I've highlighted here, there's the sales, there's the purchases, the carriage inwards, the stock on the 1st of the 1st, 2021, so the start of the year, because you can see the trial balance is at the 31st of the 12th, 2021. And at the bottom there, stock 31st of the 12th, 2021 is €5,000. Now, the reason stock is down at the bottom there, and equipment as well, actually, which we'll be seeing a little bit later on, those are actually going to be used twice in this question. So the closing stock at the end of the year goes in the trading account section, and will also go into a later section called current assets. Because if you need to raise money quickly, you can sell that stock to do so. So that's why it goes in the current assets section. So that information was given to you in the question. So then what you do is you use that information, and this was filled in for you, but you use that information then and structure it like this to get the gross profit. So sales less cost of sales. So you see you can add up the opening stock, the cash purchases, the carriage inwards. Haven't filled it in for you there, but that's called cost of goods available for sale, less the closing stock at the end of the year gives you cost of goods sold, and then the 270,000 minus 167,000, and that's where the gross profit of €103,000 comes from. So when you're doing these questions, just learn that, lay it off by heart. It's always very, very similar in types of questions that can come up, and that will help you significantly then in completing that section. So the next part then is the profit and loss account. So you're going to use the gross profit that you got, and what you're going to do is you're going to subtract the expenses away from it. So gross profit minus a business expenses equals their net profit, or sometimes they can have a minus number, which would be a net loss. So the purpose of the profit and loss account is to calculate net profit or net loss for the year for a business. So net profit is what is left after all the expenses have been paid out. So that's why it's gross profit minus expenses equals net profit or net loss. Here's loads of different common examples of business expenses. So carriage outwards, we've seen carriage inwards. Carriage inwards, the transport cost of getting the good into the shop to sell. Now carriage outwards could be the cost of transport to get the product out to the customer. So carriage outwards would be an expense. Bad debts. So if you have sold goods to somebody on credit and they haven't paid you back, because remember, selling on credit means they get used to the goods now and pay for it at a later date, then you have to cover the expense yourself, which is not a good position to be in. So bad debts could also be an example of an expense. Depreciation. So in this question, we'll see equipment in just a moment. So when an asset loses value over time, maybe due to old age or obsolescence, in other words, no longer in use, that's what obsolescence means. That's obviously an expense for a business as well. They have to write that off. And then other common ones, you should be familiar with: wages, salaries, insurance. You can see a huge list of them there anyway in a business. So what you'll do with your gross profit is you'll subtract whatever expenses they've given to you in the question, and that will be your net profit. See more common ones there. So in this particular question, I'll just use a yellow highlighter now to show you. You've got telephone and broadband, light and heat, rent, wages, marketing expenses, and then you've also got your fixed asset, which needs to be depreciated by 20%. And all you would do there is in the box here, you would say 40,000 by 20%. And that's what's going to give you the depreciation figure. So if we scroll down here, this is the profit and loss section. The gross profit of 103,000, which we've worked out already, less expenses. You can see you're getting a mark for your heading there, and just putting all your expenses down and adding them all together, and that gives you 90,300. Gross profit of 103,000 minus the total expenses of 90,300 gives you a net profit of 12,700. So in this particular question, that's how you get the net profit. And you can see headings are important. Marks are being awarded for those as well. So make sure, guys, that you put them into your question. Now, the next section is an appropriation account. This is the final part of the income statement. And what you'll do is you'll work out how the profit of the business is to be distributed. So you'll be looking at things like dividends here, for example, as part of this question. So remember, a dividend, if a shareholder has invested in your business and you've made a profit, you have to pay them a return called a dividend. So dividend is just that payment that shareholders will get. So when we've done that, the final figure will be called closing reserves, or sometimes it can be called retained earnings or retained profits, or even final closing P&L balance. There's lots of different names you can call it, whichever your teacher does in class, but that's going to give you that final figure. So you can see here, to work this out, net profit minus the dividends, because that's coming off your profit. So, you have to pay your dividends. It won't be part of your profit anymore. So net profit minus dividends plus opening reserves. So opening reserves is basically like your money you have to the side as part of the business as well. Like what you're going to have to call on if you needed to or whatever. So that's your opening reserve. So net profit minus dividends plus opening reserves gives you the final closing reserves, or retained earnings, retained profit, final profit and loss balance, whatever your teacher calls it. As I said, I've kind of used different things here just because I know there's a number of different things that can be called, which you'll see in the marking scheme as well. So when you do that, you'll see, well, look firstly at the question figures that we'll need to use. So there's a dividends given to you in the question, and there's a profit and loss balance on the first of the first. That's opening, like opening stock, first of the first. So you're going to use those figures here. So let's have a look. Net profit less the dividends, which is 2,700, add back on the opening reserves of 17,000, and there's that final figure. P&L balance 31st to the 12th, or closing reserves, or retained earnings, retained profit, or whatever. That final figure there of 19,700. So now your income statement is complete, and you're going to move on now to the statement of financial position. So the statement of financial position for a business is the final step in presenting its final accounts. So what you'll be looking at here is its assets. Assets are things that they own, and they can be either fixed assets, and fixed assets have long-term value, or it can be current assets, which are day-to-day value. So in other words, if you needed to raise money, you'd have long-term assets, which are called fixed assets, and you'd have short-term assets, which are called current assets. You also have liabilities. Liabilities is what you owe. So if you were to close down tomorrow, you'd have to pay these things back. It's kind of a good way to think about it. And then the capital structure is just the money. Where does the money come from? And that's really the finance by section in a question. So you can see here it looks at fixed assets, current assets and creditors falling due in a year, or current liabilities, and finance by. So starting with the fixed assets section first. In this section, you'll have cost, you'll have depreciation, and then what you'll have is net book value. So the question will give you the cost in for a company. It'll give you the cost in its trial balance. Basically what the question is. Depreciation, as we've seen with equipment already, is kind of something that will be listed in a question. But net book value basically means what is it worth today? So if the business had to sell this today, what is its net book value? What's its true value today? In other words, how much would it be worth if they needed to get money for it? The depreciation will also be what was in the expense account. So whatever your total depreciation was in the expense account is also what the depreciation is going to be here. So you can see here, our fixed assets are buildings and equipment. So I've used orange here, fixed assets, buildings and equipment, long-term value, things that will be around a long time. Think of it like that, big things, capital things in a business. And there's your only depreciation, which was equipment as well. So we're taking this again from the question. And now you can see here, to do the fixed asset section, it's cost, depreciation, net book value. So you write those headings in yourself across the top. Fixed assets is its own heading, which got a mark there. Cost is what it was in the question. You can see buildings is 220,000, equipment is 40,000. Just add them together. Depreciation, well, the only equipment had depreciation. The buildings didn't, so the buildings is 0 for depreciation, and equipment is 8,000. And net book value, what it's worth today, 40,000 minus its depreciation means it's 32,000. So you're just adding down really for all the figures here. So depreciation is fine, is 8,000, and then net book value is 220,000 plus 32,000, which is 252,000. So that's basically your total fixed assets figure. Now you put 2 little lines underneath the cost and the depreciation because you've just shown those figures, but the figure you're going to move forward with is your net book value figure of 252,000. Now, we're going to try and work out working capital next. And working capital is the difference between current assets and current liabilities. And current liabilities are also called creditors falling due within a year. So common examples of current assets to look out for in a junior cycle business would be bank, which is your own money in the bank. Debtors are people who owe you money. Closing stock, which also appears in the trading account. Remember at the bottom we said we're going to use that twice. So closing stock is any stock you haven't sold yet in your stock room, and then your own cash in bank or cash on hand, or sometimes it could even just be called cash. So these are kind of the typical things that will go in the current assets section. So these are things you own that have day-to-day current value. The value can change every day or whatever. And then the current liabilities or creditors falling due within 1 year. In other words, you owe these things. Creditors are people you owe money to. And bank overdraft. If you've gone over your limit in your account, you owe that back to the bank. So there's kind of the ones, as I said, to look out for in these types of questions. So if we look in the question again, the figures that are relevant here, there's cash. So cash, as we've seen above, is current asset. There's debtors, as we've seen above, is a current asset as well. Creditors will be a current liability, and bank overdraft will be a current liability as well. And then you've got stock 31st to the 12th, 2021 at the bottom of 5,000. That's also going to be a current asset as well. So here's the section. So when you've got your total fixed assets, the next thing you do is current assets, heading 1 mark. You add them all up. It doesn't have to be in that exact order either, so don't worry as long as you've shown them properly. So closing stock, cash in hand, debtors, you could have had debtors first or whatever, it doesn't really matter. So you add those 3 numbers up and you get 22,700. Your next heading is your current liabilities or creditors falling due within a year. And then you've got creditors and bank overdraft. You add those up, then you get 14,000. And to get the working capital, it's 22,700 minus 14,000, which is 8,700. So working capital is always current assets minus current liabilities or creditors falling due within a year. Now, I have another note here. To get the next thing in the question of total net assets, all you do is you add the total fixed assets and working capital together. So you add them together. So you can see here the 252,000, which is here, plus working capital 8,700, which is here. Adding those 2 numbers together, you get 260,700 euro. Okay, we're now on to the final section of the question, which is the finance by section. And this is basically where the money comes from, how the business is financed, and it's made up of issued share capital, long-term loans or creditors falling due after 1 year, and the closing reserves or retained earnings. And that's the last figure that you got on the first page of the income statement. So you're going to add those 3 things up to get capital employed. So I've used kind of a purple highlighter here. you can see at the top, authorized share capital is highlighted, that 400,000 €1 ordinary shares, because you do actually show it in this section. However, you don't use it as part of adding it up together. Your issued share capital and your 9-year loan. This is a loan after a year, so 9 years of a loan. So those issued share capital and the loan is where the money comes from to run the business, as well as, that's plus RE, retained earnings from your income statement or your closing P&L balance, or whatever you call that term you use in your question, whatever you call that, you add that up. So you're going to need to use that last figure from the first page. So those are the things that are relevant for this particular section. So you can see that here, heading finance by, starting off with the share capital, 400,000, and like in the fixed asset section with cost and depreciation, just put a line, double line underneath that just to show the number, but you don't have to do anything with it. The real number in play is the issued share capital of 160,000. So the amount of shares they can sell is authorized, but the amount they've actually sold is issued. So in other words, they could raise another, 400,000 minus 160,000 is 240,000. They could raise another 240,000 if they needed to, but what they've actually sold is only 160,000 of what they could. So that's why the 160,000 is the real number, the number in play, if you will. The P&L balance, or your closing reserves, or your retained profit, that's the final figure from page 1, the income statement, that 19,700. And then you got your long-term loan, your long-term liability, or creditor falling due after a year of the 9-year loan. And when you add them together, you get 260,700. And that's always called capital employed. It's a really important heading that you as a student need to put as the last thing in this question, capital employed. And that's 260,700. Now, to check whether you got the correct answer, the total net assets and capital employed figures should always be the same number. This is a good way to see if you've answered the question correctly, as I said. So if you come here, you'll see, remember, our total net assets figure, adding the total fixed assets and working capital together, was 260,700. And also the capital employed figure was 260,700 as well. So guys, that's a video going through the 2022 Junior Cycle Final Accounts question, and I hope it will help you with your study.